Good afternoon, ladies and gentlemen. Welcome to Business Today Television's series on Market Masters, a collection of special shows where we get you to meet exceptional talent on Dalal Street, which has an ability to spot market trends, market opportunities, and of course stock picks much ahead of the competition, as also ahead of the retail investor. Our guest today is Mr. Taher Badshah. He's the President and Chief Investment Officer at Invesco Mutual Funds for the past 6 years from January 2017. And before Invesco, Taher was working with Motilal Oswal Asset Management Company for an equal period of 6 years. Overall, Taher has spent 30 years on the sell and the buy side of the market and is truly the Sultan of mid-caps. The funds that he's handled over the past 12 years have seriously outperformed the market, the broader market, the indices, and of course peers over the longer term. And his abilities to generate extra alpha, which is the extra return over the market return, are truly legendary. Mr. Badshah, welcome to Market Masters. Sakshi and I have the pleasure of hosting you. Good afternoon. And what a time to be in India.
Good afternoon, Shailendra. I can't agree with you more. There always comes a time in the history of every nation when they stand out relative to the rest of the world. And we've had examples in the past of a few very large, important countries and nations who have done that. And I think you're right that, if we conduct ourselves well and if we do the right things, we as a country probably have that thing and that stage in our life cycles or in the journey of the country's history that we will be able to produce something very important in the coming few decades, I guess.
Okay. Taher, what we'll do is that we'll break this wonderful show into several parts. We are going to take views from you on where markets are headed. A lot of very inquisitive viewers have written to us knowing that you would be with us. So we'll be taking a couple of questions from that huge list of queries that has come in. And of course, we'll also look at where markets are headed. So in that series, let's begin with the fact that as I mentioned, you are the Sultan of mid-caps. Some of the most wonderful picks that have come from your mind have accumulated at Invesco India Mid-Cap Fund, which we'll also discuss. But let's begin with the initials. We have in front of us the Nifty Mid-Cap Index and the Small Cap Index, record highs and tremendous momentum, as well as unsatiable demand for mid-caps from all parts of the market. Is the market overheated in your experience, or is this par for the course that we see coming in for the next 6 months to a year?
So, Shailendra, at the outset, let me probably caution you. I don't know whether you've taken my surname too seriously, but nonetheless, having said that, to respond to your question, look, we are in that phase where that initial cycle has been pretty strong and undeniably so. In the last 6 months, or let's say at least the last 3 or 4 months, the mid and small cap space has been bursting with energy, and there has been a lot of excitement. It does always happen even in the past cycles that we've seen in the mid and small cap categories. We've seen those bursts of outperformance, but it does not necessarily mean that it is the end of the story, or it doesn't necessarily mean that it is kind of completely done with. We can obviously see pullbacks, especially after strong moves, but this is a category which is known to produce strong moves. So I don't really think it is uncharacteristic of this category in terms of what it is doing right now. So we are up about 20% on the mid and small cap index in the last 3 months, maybe about almost closing in on 30% in the last calendar year, or a little more than that. But it by no means, to my mind, is something which is completely done with. I think important thing is that do we ensure that we get a good economic cycle, domestic economic cycle over the next 3-5 years, as we feel we should be getting compared to the last 4-5 years. I think if we get that, then even if we might get certain pullbacks along the way, those to my mind will turn out to be still investing opportunities even in the mid and small cap space. Economy rather, I would say, more than the markets, are actually broadening out or will broaden out even further. We've seen, even I think to some extent it's the phenomenon even in some of the global markets. We've seen that 6 months back the returns were relatively more concentrated, coming out of a handful of stocks within the indices or very small parts of the market. I think even in the US and a few other areas, the markets are broadening, and I think India, it has already started to broaden and will probably broaden even further. So I think this is something which is still on. And last, I would also like to tell you with regard to this question is that, even though the indices have done well in the last 6 odd months, on a 2-year CAGR, they are still not uh, anything very close to what we've seen in the past. So in good economic cycles or domestic economic cycles, we've seen mid and small caps compound even at an aggregate CAGR of around somewhere between 25 and 30% for 4 or 5 years. Against which today, over the last 2 years, we've seen CAGR rates of around somewhere between 20% on the mid cap and about 17-18% on the small cap. So there's a fair bit to go. And last but not the least, I think the way the economy is shaping up and also the way the overall economic construct is these days, there are many more opportunities which are coming through, new types of business models which are emerging,
Right, sir.
which are relevant in the current context. So I think they're adding to that excitement as well.
Tahir, before we broaden and deepen the argument for investment picking in mid caps and small caps, I'll also show you the graphs for the Nifty CPSE index, which is the collection of public sector enterprises, and of course the PSU banking index. Both of them, at least the CPSE index is at a record high. The PSU banking index is reaching that way. Do you think there is this demand, this unceasing demand for such stocks is standard deviations away from the normal mean, or given the broader growth that we are seeing in the economy as also the undervaluation of these two sectors, this is par for the course?
So I think within the PSU space, what we've noticed is that businesses which are relatively more unique or probably are seeing the first structural change or the first cycle of structural change are getting rewarded very meaningfully. I'll call out
Nifty.
Defense is clearly one sector which has not necessarily. I mean, we've not really had a great defense cycle at any point in time in the last. I can't recollect in the last 10 or 15 odd years. This is the first time that we're seeing defense-oriented stories of the current set and new enterprises which are getting listed. Even some of the large public sector enterprises have only got recently listed, such as a Hindustan Aeronautics or a Bharat Dynamics. For the longest time ever, I remember the only public sector pure play in defense that we've always had is Bharat Electronics. So I think I'm just trying to break down that PSE space further into more slices, and I see that as a distinct set where there is a structural story in our view, and we all can see what's the overall objective of the government and the direction that they want to take as far as indigenization and import substitution is concerned. So in there, I think there will be enterprises which have re-rated, obviously, and they have done well, but they have reasons for doing well as well. And I think while they have re-rated, they are not at, I would say, atrociously high multiples. They are obviously not at multiples which are easily assigned to PSUs. I mean, they are much higher than that. So to that extent, markets are finding it a little difficult to adjust to those higher multiples. Then there is another set, which is basically the PSU banks, which have re-rated, but we've seen cycles of PSU banks earlier as well. And so I don't think they're doing anything which is very different from what they've done in past cycles. And to that extent, yes, they've got re-rated, but I think it'll be difficult for them to kind of re-rate significantly from here, especially given that there will be there's another set of banks, which is the private sector banks, which are also deciding as to where the valuation gap should be or where the valuation peaks should be. So beyond the point, it'll be difficult for PSU banks to kind of, just further meaningfully appreciate in terms of valuations. The third set is basically all companies in between. I mean, there are several other industrial enterprises and few others which are basically a beneficiary of the cycle. And I think that's what happens. So as I called out, I feel quite confident that we are going to be in a good economic cycle in India in the next 3 to 5 years compared to what we've seen in the past 5 years. And many of these companies in the PSU space are beneficiaries of that cycle. So it is obvious for them to kind of, gather attention. And these are times when you first have the round of P multiple expansion, earnings follow later. But the cycle, if it continues to remain strong, then I think the earnings should catch up or even surprise. So that's how it is. And lastly, I think in the PSU set, there are also companies which have not re-rated. Like, for example, the oil and gas or the oil marketing companies. They are not necessarily doing anything very significant compared to what they've done in the past. So we've got PSUs of every hue and color.
Okay. Mr. Badshah, good afternoon to you. We'll take a few set of questions from our viewers also. The first question that we are getting is from Mumbai, and Shivam Pathak wants you to answer this question for him. And since Shail has already christened you the Sultan of Mid Caps, I first want to understand, on the Nifty, what do you really expect? So Shivam wants to know, where do you see the Nifty by general elections 2024?
No, I don't know exactly what the index will be in 2024, or especially May 24, any other precise date. But as I said, I'm looking at a scenario where markets from a very constructive standpoint, I see many of the risks not the risks, but some of the anxieties that were there probably at the start of the year gradually receding, barring, of course, the behavior of the monsoons and its likely impact. I think much of the uncertainty is relatively behind us. I think we have a framework where right now the structural advantages of India can assert themselves, be it in the form of whether manufacturing or whether it is demographics or whether it is even monetary policy, which has stood out very well for us. So I think we are in that sweet spot of that cycle. And like as I said, that stage comes in the history of every country when we can probably do that. So I think if this were to be the case, then I see steady compounding coming through, because the earnings cycle, in my view, earnings upgrade cycle rather, in my view, I think had paused in the last 12 months or so for various conditions, various reasons. I think the earnings upgrade cycle may recommence in 2024. And if that were to happen, then we are not at very stretched valuation. So we are at averages somewhat higher than averages. So if we take about a 15% multiple upside plus a 15% kind of earnings growth, I think we can compound at about 30% over the next 12 to 18 months, and that can put you somewhere in that vicinity above. So I'm talking about CAGR 30. I mean, combined return of 30%. So compounding at, let's say, about 15%. And if we get that, I think, to invest at something in the vicinity of 22 odd, 21 and a half, 22 odd in the next 18 odd months is not something which will come as a significant surprise to me, I think.
Okay, so bullish view right there, and things going well. You've already listed them out, but I wanted to understand also this larger global context that we are placed in right now, juxtaposing scenarios. The West is dealing with higher inflation. The Fed is still hawkish, wants to continue to, fight the inflation. China is facing deflation, and we are somewhere in the middle. How do you see India growing in this kind of a scenario? And do you think things that we had not imagined are now working in favor, and that may perhaps lead us to even higher growth that we are imagining?
So, Sakshi, I would say that you look, as far as the US is concerned, and you called out US and China, so and obviously the other two large relevant economies of the world, and we somewhere in between. So, to my mind, I think US is managing a decent soft landing. I think a year back, same time last year, there was a heavy debate around whether the US will get into a recession or will it be a hard landing, or whether it will be a soft landing. I think 12 months from then, we can now safely say that they've managed a soft landing. And how do you reconcile that? It is basically that, look, I mean, their economy is not toppled off, despite the fact that they've gone more than 500 basis points of interest rate hikes in a span of about 12 odd months. And in the process, they have brought inflation down quite well, partly through the moderation that they brought about in the economy, and partly base effect and everything else which has played, and partly slowdown in commodity prices. But I think 8-9% inflation down to 3, I can understand that the target is still 2 and they have got work to do. But I think in general, I would like to say that the economy is not toppled off, and therefore to that extent, it is a reasonable soft landing. From here, I would like to think that the labor markets are somewhat softening, provides further room for them to kind of stay put, moderate the economy a little more, and yet ensure that things don't go completely awry, and try and get to that target of 2% or a little below that. So I feel quite okay with the US economy, to be frank with you. On the other hand, China, well, I mean, they've got some work to do, and they've got to think through a little bit of the readjustment that the economy is going to go through. So I know that there is a certain amount of confusion. Probably, at least it is apparent to outsiders that the real path of the economy is not very clear. But they are taking a lot of steps, and we've seen, the last 1 month, they're taking several measures, many reforms, if I were to say so, be it in the form of interest rates or real estate or many other things. But they are in a transition of their own. They want to take a higher plane. They want to do things which are somewhat different compared to what they've been doing in the past, whether be it in terms of technology or whether be it in terms of manufacturing. And in that, India should be a beneficiary as well, because in doing so, they will vacate certain pockets which they have been used to do. So, and we'll be a beneficiary of that, whether be it in mid-level electronics or whether be it in chemicals or a few other things that they would want to vacate. So I think we are in our own journey. China is in its own journey. And therefore, I don't see India's vulnerability as much, because we are not necessarily dependent as much on US and China alone for our growth. I think we have our own drivers. I'm not saying that they are not important. We are part of the global market. But it's, I just one last thing which I would say before you move on to the next question is that, 2004 to 8 was the period, if you guys recollect, was strong global growth, and India too benefited, and our own investment cycle and capex cycle did very well at that time. But it was largely a function of what was happening globally. I think now what's happening in India is more on its own. I think we're having a good economic investment cycle, even when the globe is not doing very well, especially the two twin engines, the US and China economies are not doing very well. So which basically, once again, means that we can assert ourselves, we can do things on our own and chart out our own course.
Right. Taher, you mentioned that both the mid cap and the small cap index haven't given much return on a CAGR basis over the past 2 years. Before we get into the dynamics of Invesco India Mid Cap Fund, I'd like to put a controversy to rest, which is that over the last 5 or 6 bull and bear markets, we've seen PSUs repeatedly, break the hearts of long-term investors. They've often been dubbed as stocks that you buy when they're ultra cheap and sell them off when they become mildly attractive or decently valued. Given the themes that you talk about in the defense space, as also railways, where a lot of work from the government has gone through, do you think this time the rally in PSUs is different?
So it's different from the point of view that, look, there are sectors where there is PSU dominance, and which is now coming as rising or emerging as an important theme, and in which private sector presence is still relatively limited. In some of the other areas too, they've generally dominated, like, for example, things like some heavy industrials, power sector, transmission and distribution, that kind of space. Even in certain pockets of oil and gas. But banking is not something which they dominate. I mean, there are good number of private sector banks as well. So some of the newer segments, like as I said, are their own bastion, and they will decide as to where the valuation should be. The PSUs will decide actually what the valuation benchmark should be. Having said that, I think it's not that, you know, just like, I mean, it happens even in the private sector companies that things get taken a little too far, and there are always times and when we have to exit or book profits or take advantage of the uh, market's frothiness, so to speak, to our advantage. And I think the same holds for PSUs as well, that there will come a time when if they anything in the investing space, whether it is PSUs or private, you don't have to make a difference as much in that. If it gets overextended, you have to think differently, and if they are undervalued, then you have to think differently. So I think there will come a time even in the PSUs when, from an investing standpoint, we will have to take corrective action. The only thing I would leave with is that compared to the past, I think PSUs in certain parts of the PSU basket or PSU ecosystem will trade at valuations, in my view, which are higher than what they used to be in the historic past. So think of them as the valuation spectrum will be probably a couple of notches higher than they've always enjoyed, or that they've enjoyed in the past. So you have to think of it from that perspective. But it doesn't mean that they will perennially just keep re-rating. That obviously doesn't happen even with the private sector companies.
Okay, Mr. Badshah, we'll take another question from our viewers. This has come via WhatsApp to us. D. Shivkumar from Bengaluru asks you, are there any particular sectors that investors should be cautious about now or consider reducing their exposure in after the recent run-up?
So I can just say that what we've been doing. So we have, so while I like the industrial cycle, and we've been very well positioned early into the cycle. About a couple of years back, you will see that even many of our strategies, it will show a lot of overweight in many of them. But tactically, I mean, we would be taking some money off the table in certain specific pockets where there is a overextension in the short run, and not with the in order to convey the fact that those businesses are no longer worthy or whatever. But you have to be mindful of the fact that markets can do funny things in shorter periods of time, so, and can give you opportunities both ways. So I think at one level, if you ask me, we have been kind of taking some money on the table in that space, and trying to see if tactically there are opportunities in the other side. Like, for example, consumption has not done well in the last 2 years or 2.5 years. Parts of consumption definitely have not done well, if not the whole space. So we run a couple of value strategies, and we in general are try to represent some value even in our growth oriented strategies. So there might be certain value opportunities which are available on the other side of the table. And so maybe industrials is one sector I would call out, where we are not exactly across the landscape, but in certain pockets where we see overextension, we are taking some money off the table. We are a little neutral as far as banks are concerned, and not necessarily very strongly excited given where we are in terms of the rate cycle, which is not fully clear at this stage. Let's put it that way. So we need to kind of ensure that. But otherwise, I think by and large our no-go areas. No, I wouldn't say no-go areas, but where we have not probably had a great presence is commodities, especially metal commodities. They're doing well in the last few days, so that's another thing. But that's the space where we've not really had a great reason to be strongly present. So I think I think otherwise most of the areas, whether it be healthcare or whether it be parts of consumption, obviously even other areas like industrials, etc., are reasonably attractive.
Okay. I hope, Mr. Shimkar, you've got your answer there. One more question we'll take from our viewers' questions. We were discussing about the economic landscape, and on that, Surinder Chopra from New Delhi has asked you this question. Given the current economic landscape, what factors should one consider when deciding where to allocate money in the markets?
I think as far as the economic landscape is concerned, look, I mean, the most important macroeconomic consideration, in my view, will continue to remain interest rates and the behavior of inflation over the next 12 odd months. And it will dominate discussions for sure, but and it might also be somewhat important, but maybe less important compared to what it was in the last 2 years of 2.5 years of COVID. I think from a macro standpoint for India, I think it will be important to assess as to what is the government policy with regard to increasing manufacturing and industrial and supporting the industrial and investment cycle. Uh, what are the budgets which are being set for that? What are the policies which are being made for that purpose? That is the most important thing to my mind, I think, because India is in that stage where, like as I said, it is very important that we get our investment cycle right. So I think that is something which we have to monitor, in which, again, there is participation of private sector. We are expecting private sector participation to increase in the investment cycle, in the capex cycle. That's an important monitorable. So, all developments around large corporates and their investment behavior for the next 3-5 years, whether be it auto companies or whether it be paint companies or a few other manufacturing-oriented companies, the chemical oil and gas sector, all these will, and even some of the renewable new gen businesses and their capex cycles will be very important to assess, because that's the whole pivot around which India's economic growth or the improvement in the economic cycle will be revolving around.
Right. Taher, before we drill into the mid-cap fund, how difficult it is these days to have a fresh pick on your radar, given the fact that over the last year or so, an average of about 15,000 crore rupees per month is coming into mutual funds via SIPs, and a good majority of that has come into mid caps and small cap funds. What has changed in your stock picking when it comes to this flow of money that is almost unceasing?
So it's a good question, but I don't think our way of looking at companies or analyzing them, or the frameworks that we use or the investment process that we use has changed dramatically. I think obviously, at least at our end, I mean, as we as a house, and I would assume even competition and our peers would be doing the same, is basically to try and scope as much as possible. I think, like as I said, the economy is broadening out, new sectors are emerging, new pockets of the economy are participating and are offering important opportunities. Some of them are obviously coming through the IPO route as well, which is fine, because they are entrepreneurially seeded enterprises over the last 10 or 15 years, and they're finding their way to the capital market. So I don't think there's anything wrong in it. And they are also providing important and new investment opportunities in new areas which were hitherto not available. So I think the only one thing which is, I would say, has strongly changed is that we are trying to be more and more granular, and we're making sure that we don't lose out on or miss out on any important pocket, because today in India there are several segments which are asserting themselves, and whether it is on the consumption side or on the manufacturing side, and we are in that midst of multiple opportunities in our presence. So that will ensure that we can stay up the curve and probably deploy that huge tsunami of money, as you said, which is coming in this space. So I know that there is good amount of money, but then it's being backed or matched by equal number of opportunities also, which are presenting themselves.
Right. Taher, one landscape that has changed brilliantly in the favor of the country is the digital economy. And what has also happened is that over the last 2 odd years, the digital stocks that got listed at very, very lofty valuations have corrected substantially and also risen decently from their recent lows. Are there any long-term picks which you see in this sector to be held specifically in your fund, or are we still overvalued in this zone?
So, like as I said, in several of new opportunities which are emerging up, we might have to think of valuations which are of a different uh, zone or a band compared to past and compared to some of the other sectors. So we'll have to think differently because some of these opportunities uh, or businesses may have initial costs and then massive scale as they go ahead, and therefore they are not necessarily linear businesses. So the investment psychology around that will have to be somewhat different. I agree with you that some of these new gen businesses, when they were, I mean, I don't need to, it's quite evident that obviously there's been a massive correction in the valuations of some of these enterprises, and which happens, like as I said, when will continue to happen in every business, whether it is private, PSU, whatever segments of PSU, as we discussed. But I think some of these businesses will also see winners emerge, and uh, uh, while we may have gone wrong in the past or as a market around the valuation of these businesses, I don't think you can just write them away just because there's been one round of failure for investors to make money out of them. I think some of them in the last 12, 18 on months have made some decent progress. The industry structure in a couple of these have changed or improved. The industry dynamics of investing have improved. And to that extent, some of these companies have emerged as even stronger, and they've probably moved a couple of notches ahead in their path to profitability. So I think it's important to not lose sight of them. It's important to assess them, and we've also taken advantage of some of those opportunities in our portfolios in the recent past.
Okay. Mr. Badshah, I wanted to now understand from you, we've been discussing these new age tech stocks. The other theme now perhaps in the near term that's emerging is, of course, the G20, the festive season, the World Cup coming in. And, a lot of buzz is starting to go around the hotel space, the eating out, food delivery, even the liquor space for that matter, with the kind of consumption stories that we are going to be seeing. Are you particularly bullish on any? Are you looking at tapping most of what we are going to be seeing?
So I think some of the parts of that of those beneficiaries we've had been owning in the past as well. We've had some exposure to hotels. We've had exposure to some recreation related products and lifestyle related products and so on. There are quite a number of stocks in the whole travel ecosystem, travel and tourism ecosystem, so to speak. So not necessarily, obviously, with the expectation that there is the World Cup and there is the beauty pageants and so on which are coming up. But I think they're all welcome because there are, as I said, some parts of the consumption market have been somewhat wobbly in the recent 12, 18 months, 12 odd months, if not more. And obviously, these are new drivers or fresh drivers, if I would call them, if not new drivers, which can bring that bit of consumption back. So as I said, this. So we are playing some of these stories, and I think, for example, the whole QSR space, which has gone through a fair bit of dynamics of its own, both slower growth as well as higher competition. I think it will do well to get some boost if some of these transient drivers of consumption come about, and that's why I said that we are looking at some of these pockets of consumption which have underperformed. Maybe take a little bit of money from that part of the market which has done very well, and valuations are a little extended and go to some of those pockets where there is some prevailing pessimism. So I think that is something that we keep doing as part of the overall investment cycle that gets thrown at us by the market. So
Right.
I think I agree with you.
So, Tahir, now the time has come to discuss your crown jewel, which is the Invesco India Mid Cap Fund. I'll give just a brief background to our viewers. It's a 3,300 crore asset which Mr. Badshah manages over 67 stocks, and it's a fairly well diversified fund with top 10 stocks accounting for 23% of the entire asset under management, and the net asset value is somewhere like 125 rupees, which basically means that you can buy these 67 stocks in one shot at 125 rupees a pop on the direct plan for Invesco India mid cap funds. Tahir, I've been noticing the fact that you are as a fund manager extremely bullish on the auto sector, and some of it bore very good fruit when last week Maruti announced that it's doubling capacity by spending 45,000 crore rupees over the next 8 years. I believe this is one of those landmark news that has come for this sector after a very, very long time. One, how do you see this industry as a mid-cap play, as a medium-term play, given the rise in incomes that we are experiencing across India, and where exactly is the maximum juice in OEMs or auto ancillaries?
I think more from the perspective of the mid-cap fund, within the auto space, I think we have been relatively more positive, or we found more opportunities. I wouldn't say we are more positive, but we found more opportunities in the ancillary space. Look, as of now, we are obviously, we have the overriding constraints of the market cap criterion, which we have to follow as per regulation. So in the ancillary, in the auto ancillary ecosystem, it's easier to find mid-sized companies which are in the auto ancillary space, but difficult to find mid-sized enterprises in the auto OEM space, where you find most of them are large cap companies by definition. But having said that, we have a couple of representations out of the OEMs too, but a larger part of the story is being played through ancillaries. What two reasons? One is basically that, you know, at some level they cater to multiple OEMs, so you are generally then you don't necessarily have to think a lot in terms of which OEM will gain market share or which will not, and you know, whose product will do well and whose will not. And the second is that they also offer you a somewhat more starker play or as an opportunity even through the exports market. So basically, that's the reason to have represented more of the ancillaries versus the OEMs in particularly with regard to autos.
The other interesting theme which I noticed across the fund is that everybody that I have come across is extremely bullish on financials, given the clean balance sheets, the reduction in NPAs, and of course the exploding demand for credit. But here is Invesco India Mid Cap Fund, underweight in financials compared with the category average. Have we sort of overextended on price when it comes to private banks, NBFCs, and to some extent PSU banks? Or is there something that we are not aware of and you know?
I just feel that, you know, it's once again, it's a constraint with regard to that sector. And
fair.
While there are a few mid-sized private sector banks, mid-sized banks in general, private as well as public, you know, we found it a little hard to reconcile as to which will be the banks which will probably, out of these mid-sized banks, which will probably, you know, become large over a period of time. So this is one of the obvious motives of some any mid-cap fund or a small-cap fund, that you want to buy into companies which are mid-size right now and will become large size, or which are small right now and will become mid or large. In banks, we found that a little difficult to reconcile with when we look back and think about it, even over the last 10, 15 years. Barring a couple of banks, not many have actually been able to transition from being small or mid-sized banks to large Indian universal banks. So that's been a bit of a constraining factor in our minds. And that's why while we do have a couple of banks which we still think might have that ability to achieve that that status, but we are guarded in that respect. Now that leaves a little bit of that gap, therefore, in terms of our weightage in banks versus the others. Meanwhile, I think we are filling up that space, that gap in other ways. So we might have you know, companies which are, let's say, initial stages of you know, in whether it be in the insurance space or whether it be in the financial product platform space, or certain capital market stories, parts of the capital market ecosystem. I think that to us look a lot more attractive. So within banking and financial services, we have somewhat de-emphasized, if I were to use the word banks, uh, uh, partly also because, like as I said, somewhat unclear in terms of how the cycle with regard to interest rates and with regard to profitability of banks will pan out in the next 12 odd months. So I think we've chosen some of the other vehicles to fill up that opportunity and play it through there. And therefore, you would see a representation of some of those, financiers, mortgage financiers, or insurance companies or insurance platforms, which are there in the portfolio.
Okay, fair enough. Let's take another question from our viewers list. Another question that's come in from our WhatsApp number. Rahul Sharma from Delhi has sent us this question for you. We've discussed several sectors, Mr. Badshah, and he wants to know which sector has the best potential for investment in the Indian stock markets for the next 5 years.
No, I think it is, I would say it is typically, this I'm saying from my experience, I could be wrong, but I feel that it is a flawed way of approaching the market, uh, because there are India as an economy, as I discussed earlier, is in the throes of several different dynamics, and therefore different sectors will throw up important opportunities. So it is, to my mind, not the right thing to just think of one best sector and ride that theme, ride that wave. You will have cycles in the market, and in the economy, and therefore, I think there will be more than a few sectors which will appeal positively at some point in time. Today, as I said, the best possible sector from a growth standpoint looks like being industrials, and that space is clearly, but it has got its challenges because some of these stocks have done very well, and they don't offer the best value at this stage unless you make your investment horizon 3 or 5 years and you're okay with interim corrections of 10 or 15 odd percent. When I look at it from a value standpoint, then we find sectors like technology, for example, quite attractive. Not necessarily, I mean, it's longer term as well, but even from a more tactical standpoint over the next 12 to 24 months, IT services is not done very well. It's quite challenged. It is out of the radar of investors, and I think valuations are reasonable. They are not cheap, but they are reasonable. So I would, and you get very good quality enterprises out there, and very good quality businesses out there. So I think. To me, that sector looks quite promising. I don't think that is the best sector around, but it is offering good value. So you have to think more from the point of view as an investor, and not from the you don't have to accumulate trophies at home, right? You have to basically you have to make money at the end of the day, and the best way you'll make money is when the market throws something at you, and when you have to decide whether there is value in it or not. And if you get that proposition right, you'll make money out of the process. So that's more important. And that's how, so from a money making standpoint, I think I'll call out IT, I'll call out some spaces in the consumption sector and parts of even industrials, which can continue to do well. I think healthcare is a sector which looks very promising. And not just the traditional pharma companies, but I think even the extended space of hospitals, clinics, particularly hospitals, is an area which India will see a good amount of shift from unorganized to organized, which is already happening. Plus the fact that organized healthcare. Indians are availing of more and more insurance, which health insurance, and as part of their discretionary spends, and that's going to change the way they avail of medical services over the coming years.
And perhaps one of the many learnings from this wonderful chat that we are having is that you don't collect trophies in your portfolio, you buy them to make money. Taher, one of the many conundrums that new investors at the moment are facing is what to buy, when to buy, and where to allocate money. So, given the fact that you've had 29 years of experience on both the bull and the on both the buy and the sell side, imagine there is a 10 lakh rupee portfolio to be made, and that the person is looking for creating wealth over the medium to long term in the Indian equity market. How would you get into allocating that 10 lakh rupees, and what would be the time frame of the total allocation?
I would say that, look, I mean, if you're a investor starting off anew, then you can't think of anything less than a decade. And I think if you're an investor who's starting new, you should really feel very good about it, because you're going to be, and especially as far as Indian equities is concerned, because you'll be going through the best possible periods in the life cycle of this nation in the next 10, 20 odd years. So I think it is going to be very well timed, but you have to sit through it. And I think there's no good time as such, especially when you're starting off as an investor. Any time is a good time, and I think, but this time is even better than probably what I have seen in my last 30 years, and we've seen a lot of up and downs and so on. But yet we've made money, and the markets have made money. But I think the glorious period lies ahead of us. So it'll be even more money, I would guess, that more returns that we will make over time. I think timing the market is not as much important, but timing industries or stocks or sectors is quite important. I think it is important to buy, as I said, companies at the right valuation or the right time, or you have to get that combination right. And maybe that, I think you have to leave it, if you're not able to judge it yourself, then you should leave it to certain professional investors. And then that is where vehicles like mutual funds come to your rescue. I think what to buy again is you have to diversify adequately. I mean, you don't have to over diversify, but you have to adequately diversify in order to, you can't wish away cycles. Even in the best performing economies, you will get cycles, and you will get rotation between sectors. We've seen that even in the last 2-3 years. So it has to be reasonably diversified, but you have to pick the best vehicles in those respective sectors too, whether it be in pharma, whether it be in banks, or whether be it in consumption or whatever. So identifying the right vehicles is important, but otherwise I think it has to be reasonably diversified. Some of the key sectors obviously have to be well represented. You can't wish away that. I think this is how I would call it out. So I think all of what I said is all available through the mutual fund route. So it is the best option for you to be able to achieve that objective.
And this has been a very nice, subtle marketing point from Taher, that look at mutual funds when you want to invest money. But point taken, that's the best vehicle to sort of give the headache to a fine thinking brain like Taher and enjoy the fruits of that genius to benefit your
thanks,
bank
Shell,
account.
for giving me a platform at BTV to be able to sell some of my wares. And
I have one final question for you. Taher, consensus is that India is the asset for the next 2-3 years across the globe. And sadly, we have seen the consensus not make much money over the last 20-30 years that at least I have been watching markets. Are there 1 or 2 points that really worry you in this rally that is unfolding in front of us so beautifully?
I think once again, like as I said, I mean, we've had disappointments in the past, particularly with respect to our investment cycle and manufacturing cycle. I hope or whatever dispensation that we might have, which is governing this country, is able to carry that thing forward. And we are in that phase where it will only be on. I mean, we'll be अपने पैरों पे कुल्हाड़ी मारने वाली बात हम ही से हो जाएगी. मतलब अगर हम it's more than others doing it for us, I think we only will probably, if at all, make it difficult for ourselves. So I hope that doesn't happen. We'll only have ourselves to blame if we lose out on this opportunity which is now unfolding in front of us. Because when all the elements are in your favor, and as we say, the stars are aligned, then you have to make the best out of that. So I think that investment cycle and keeping up that investment cycle is very important. We faltered in that regard in the past, and I hope that doesn't happen. Yeah, I think that is the one key thing. I think we have to obviously, there are couple of other things which we have to be mindful of. One is the fact that as a nation we are starting to get a little more we are taking a little more credit. We are becoming credit focused, and we have to make sure that we don't overextend ourselves. We're still in the very early stages, so I don't really want to make it a call out something which is alarming. But clearly, we are opening up to credit, and it's important that we either as families or households manage our risk and exposures reasonably well. So that's something which I would be a little mindful of. And the other thing is that aspirations are rising. So as a country, as many parts of our population, households, etc. So we need to make sure that we provide the right forum for these aspirations to be met. And what I mean by that is job opportunities and employment opportunities. I think if we can manage that as a nation, I think we should be reasonably okay.
What a wonderful 45 minutes with Mr. Badshah, and it's been such a learning experience. Thank you so much, Taher, for your time, and we do hope that you will be coming more often to share your wonderful insights into stock picking, as also sectors where to invest in, and how to cautiously play this wonderful rally that's unfolding in Dalal Street, as also in the portfolios of those who are patient, buy quality, and stick to it for the longer term. Thank you so much.
Thank you, Shail. Thank you, Sakshi. And wonderful to be here, and look forward to being once again on board sometime in the future. Thank you very much, guys.
Absolutely.
So that's it, ladies and gentlemen. What an interesting conversation with Taher Badshah, the President and CIO of Invesco Mutual Fund, and one of the finest stock pickers that I have seen over the last 30 years when it comes to mid-caps. From Sakshi and my side, thank you for joining us, but remain glued to BTTV for such excellent views from the markets, as also participating in this wonderful rally that's in front of us on Dalal Street. Thank you.
As Delhi gears up to host the G20 summit, the Aam Aadmi Party and Delhi LG VK Saxena are at loggerheads over shivling-shaped fountains which have been installed in the national capital. AAP has objected to the installation of these fountains and accused Delhi LG VK Saxena and the BJP of hurting the sentiments of crores of Hindus. Delhi Minister Saurabh Bharadwaj sought an apology from the LG, calling shivling-shaped fountains an act of sin, even seeking an FIR against the Lieutenant Governor. VK Saxena said that fountains are not shivlings but art pieces made